Hey everybody, it's Barron Shannon from AlphaTrends.net. Today's Saturday, the 17th of September, and time to take a look at this market for the week. The S&P 500 actually had a better week than what's indicated here. The S&P, the spider, paid a dividend of $1.08 on Friday, so you could basically add $1.08 to that, and that's where we would be. But the Nasdaq really performed well, up close to 3% on the heels of some strong performance in the semiconductors and in the biotechs, whereas oil lost ground. And let's take a look at the action on the charts and make some sense of it. We're going to look at the SPX today because looking at the SPY, you can see here's where the SPX is. That didn't account for a dividend because it's calculated differently. But the SPY, you can see, is down below the 5-day moving average. So this is a little bit inaccurate. That's why we're going to look at the SPX for now. And it's good to see that the 5-day moving average is flattening out, and we are in a position where this 5-day moving average will have the ability to begin to rise once again Monday into Tuesday of next week. But we are still below a declining 10, 20, and 50-day moving average. And we could look at the daily chart here and say that since the Brexit, we've been stuck below the volume weighted average price. So again, we could add about $1.08, and you can see it's right around that volume weighted average price since Brexit in the S&P 500, and that going again back to the SPX, we've broken important supports. We were stair stepping higher with higher highs and higher lows, and that obviously had been broken this past week, a week and a half ago, and we remain below that. So realistically, we still have to express a lot of caution with the S&P 500 until it can get back up above really this level up in here near the 50-day moving average. As for the Nasdaq, much different story. We saw that the Nasdaq pulled back down to the 50-day moving average, had a big day here on a Monday, and then we kind of settled in a little bit. But what we had seen transitioning in here throughout the week, which we were talking to subscribers about, was that we had that washout, we had this higher low, we had another higher low, and at the same time we saw the market testing resistance. So it broke there, it made a higher high above the flat to rising 5-day moving average, and the buyers are clearly back in control of the Nasdaq after a quick pullback. So the fact is, we never know if these pullbacks are going to turn into something more significant. So we get defensive until we have actual evidence that the buyers are back in control. And we clearly have that evidence in the NASDAQ right now. For next week, early on, we're going to want to see 116 and a quarter to 116.50 hold as support. If we can do that, then we will still give the benefit of the doubt to the buyers in the intermediate term. And of course, that long-term trend as well, because that it remains above all the longer term moving averages. For the Russell 2000, we can see that it's not quite as strong, and we were only up a half of a percentage point in the Russell this week, and you can see that we've got that declining 5-day moving average, which is starting to flatten out in here, and that also will have the ability to flatten out once we get rid of this information from 5 days ago. So that's going to be the key, is probably another day down in this area, but we are seeing some important things. One, since that gap lower, the volume weighted average price that I just clicked in, you can see we're holding above that as well. And from the low and from this gap, we can see we're above all these key volume weighted average price levels from each day since we've been lower. So the buyers have been regaining control, and realistically, this is the key band of support we want to see hold. Basically about 110, 121.10 up to 121.50. If we maintain above that, I think there's a pretty good likelihood that we will be able to bounce from this 50-day moving average, and you would want to look for the opportunity, I think, to buy above this level here for an intermediate term move with a stop somewhere underneath this level, of course, depending upon whatever your time frame is. But it does look like the Russell 2000 can continue to move higher. Semiconductors just won't die. As we know, they've been riding this rising 10 and 20-day moving average. We pulled back to the 50-day moving average and then stabilized in there. And for the semiconductors, it was really kind of the same as what we see here, almost identical for the Nasdaq. So there's the Qs, and here's the SMH, which again, we can look at the volume weighted average price since it broke down, and we were showing signs of stability. And as I mentioned to subscribers, we were above all these key volume weighted average price levels. And while I was looking for the possibility of a short sale in the semis if they were to break below this level. Instead, they broke higher here, and we were talking about how it was looking positive because, again, more repeated tests of this resistance and the higher lows gave us a clue that the buyers would reemerge here, and they made a new high on Friday, did pull back a little bit intraday, but for next week I think that what we want to see in here is most likely, since this move began higher, we want to see these volume weighted average price levels hold near 65.5 really to 66 in that 5-day moving average. I would think that the semiconductors might digest a little bit in here and then be able to try to move higher. Biotechs were impressive, and this is a group that were long. They came down flush below that 50-day moving average. And the prior band of support, let's go to a 60-minute time frame to see that a little bit more clearly. This has been a key level. This was the prior support, and over the last 2 or 3 weeks, it's acted as resistance a couple times. Well, what we saw this week was that it got back above there and then made that higher high. In fact, we spoke about buying it above this level right here on Thursday, and Thursday it took off nicely and is back up through that prior band of support. So what we're going to want to see, I think you give the benefit of the doubt in the intermediate term to the buyers as long as we remain above 277 to 278. So really above this level, I think you can expect higher prices in the biotech stocks. We are above the volume weighted average price year to date. We didn't come down and test that, and we're above the 50, 100, and 200-day moving average. Although the 200-day moving average is declining, it looks like the biotechs are getting ready to turn back higher again. And in fact, I've spoken about Amgen before, and I think Amgen can be one of the leaders. It's held up much better than the average biotech over the last year. And this past week, we saw kind of the same thing, a flush below that rising 50-day moving average. And then in Amgen, the buyers regained control. I think that you could probably buy this next week above this level here with your stop down near about 171. So 2 points risk, and I wouldn't be surprised to see this go on to new highs this next week. Apple had a phenomenal week. Obviously, it had that shakeout, and then from that failed breakdown came this fast move higher. So Apple is looking good on the longer term basis now as it's finally made a higher high above that 200-day moving average with a higher low. I don't think you would want to buy Apple up here. Instead, I think you want to see it settle down a little bit, and then maybe it can continue its momentum. But very impressive week for Apple. Bonds regained a little bit of ground on Friday, but for the week, the bonds were down 0.5 percentage point. It's been a terrible month for them, down 4%. And we broke that major band of support over here that we had been talking about. They were giving the benefit of the doubt to the buyers as long as we remained above that. But they obviously, sellers that is, gained control a week and a half ago. And now these bonds are kind of a mess here on the longer term chart. I would expect them to start to see them stabilize in this general area above the 30 and 40 week or 150 and 200-day moving averages. It seems as though they came down quite hard. Now it's time for them to stabilize. I wouldn't be looking to short those for sure. We had a great trade in CLCD this week. We got involved right here, and nice percentage mover. Anyways, that's all I have for now, and thanks for tuning in.